All right, good Nvidia morning. We have positive futures, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the AI boom takes a breather, or rather it looked like that when Nvidia signaled a growth slowdown, but now Nvidia shares have turned positive. The CFO tells Bloomberg that President Trump's plan to skim $15 off of China chip revenue could face legal challenges. Meanwhile, on the data front, the U.S. economy expanded in the second quarter thanks to a pickup in business investment. I feel like that's a related story as well.
Yeah, and just to go back, it's 15% of revenue, $15.
Did I say $15?
You did. That wouldn't be very much
Sorry,
at
I meant
all.
15%. That's the export tax.
Let's take a look at what's going on with Nvidia shares right now. As Matt mentioned, they did go positive. They erased a decline of as much as 3.3% overnight as traders reacted to those numbers. You can see shares now deciding what to do, Matt. We have a great roundtable coming up. We'll get into the why exactly.
Yeah, what a story. Ed Ludlow came in from vacation to do an interview with the CFO of Nvidia, who gave him a forecast for China chip sales in the third quarter. Watching the other Mag 7 stocks, which are the main drivers of Nvidia's revenue, not a lot of change here, just like Nvidia. So pretty much everything is hovering at these record highs, Katie, and not making any movement forward or backward.
Well, a lot of that has to do what's going on with Nvidia shares pre-market in terms of that trading range. Let's listen to the CEO speaking on the company's future prospects to crack the China market.
So I think the opportunity for us to bring Blackwell to the China market is a real possibility, and so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race.
And in a Bloomberg interview, Nvidia's CFO says that the Trump administration's plan to charge a commission on Nvidia's AI chip sales to China hasn't progressed beyond the early stages. She says, I don't have to do this 15% until I see something that is a true regulatory document. Let's keep the conversation going now with Bloomberg Tech co-host Caroline Hyde and Mandy Singh, Global Head of Tech Research for Bloomberg Intelligence. Great to have you guys with us. Caroline, I'll start with you because we were talking about the share reaction just before the show started. And, I mean, you take a look at these numbers. To see these declines pre-market, did they match up with what we actually heard from the company?
Look, this is a company that is $4.4 trillion worth already, is posting more than 50% gains in revenue and in earnings per share. It delivered on its second quarter. In fact, the fact that the Chinese sales weren't included in the third quarter and they still signaled $54 billion worth of sales, I think this was categorically a meet or beat, but many people want to see Nvidia smash it. So perhaps that's why we saw a little bit of like digestion. The shares now seem to be coming up to flat because I think more broadly the opportunity was really signaled well here. $50 billion worth could be done with China if they're allowed to, and they are in talks with the government. That's what certainly is being discussed today with the government about a reorientated Blackwell architecture for China. They're also saying $2 to $5 billion could be going in terms of H20s already. $4 trillion worth, he said this already, but this is the Nvidia CEO's key takeaway. $4 trillion worth of AI infrastructure needs are there already. How much are they going to service that? $600 billion worth of capital expenditure already committed to by their key hyperscale clients. And AI sovereign was another big number, $20 billion. I'm throwing a lot of numbers at you, but for me, the scale of the opportunity is still clear. It's a company that vindicates.
I'm listening, but the camera didn't show my Olympic eye roll when you mentioned the China opportunity, because we've injected so much volatility into this story, and the Chinese Communist Party has essentially ordered companies in China not to buy Nvidia chips. And I'm sure that's H20 or Blackwell, right? So even though the CFO says they could have $2 to $5 billion if they ever get an agreement with the Trump administration on paper, I mean, isn't the likely outlook for China chip sales closer to zero, Mandeep?
I think that's how the company is guiding. But when you start comparing year-over-year growth numbers, or even compared to what they did,
it's the slowest revenue growth in over 2 years.
No, but the reason why it's slowest is because the China number was there before, and now it's not there. So from that perspective, the comparisons get a little noisy. But I want to go back to Caroline's point about $600 billion capex from hyperscalers. To my mind, if you add up the capex of all the hyperscalers as of today, it's around $400 billion. So that's implying a 50% bump in capex for, I think he's talking about next year. So from that perspective, we didn't hear Microsoft guide to 50% increase in capex for 2026. We didn't hear Meta guide 50% increase in capex. So clearly that concentration is growing, and he sees those commitments from the hyperscalers that they will increase their capex next year. And so from that perspective, I think it's a negative for companies like the hyperscalers where they continue to spend big. I mean, if you're looking at their free cash flow, you're probably taking those numbers down because we're talking about a 50% increase in capex.
I want to push back on your China negativity to a certain extent, Matt, and the eye roll is vindicated in many ways. But we just heard from the CFO telling Ed Ludlow and Ian King that she's got the licenses. She can sell into them. They even, until she gets a true regulatory document, she doesn't even need to give the 15% to the US government.
But Xi Jinping says don't buy. So if you operate in China, are you going to buy?
I think many still are having to buy because Huawei hasn't got the capacity. Neither does some of the other players yet. It's just not there. They're asking you, don't do work on government-related
Mandeep agrees with you. He's shaking his head, yes.
Even the Singapore sales. I mean, Singapore is such a big market for Nvidia. You have to ask yourself, are those all for U.S. customers? And some of them are being used on the cloud by Chinese LLM companies. So it's very hard to track exactly how their chips are being used. And to my mind, there are so many large language model companies in China that are keeping up neck and neck with the U.S. LLM companies. How are they doing it? They have to find the clusters to train their models on. And some of that capacity, I bet you, is getting used in China.
Well, also to Matt's point, I mean, if the Chinese government encourages you not to buy chips from Nvidia, what are your other options? We heard from the CFO also saying that the company is urging the U.S. government to approve a version of the more up-to-date Blackwell chip for sale in China. Who competes with Blackwell at this point?
I mean, look, it's your U.S. companies, whether it's AMD or any custom ASIC, but if Nvidia can't sell to China, so can't AMD. So you go back to the local Chinese chip makers, and to Caroline's point, Huawei still doesn't have that kind of capacity. So clearly, I think when it comes to training, you rely on a certain type of chip, and you're not going to switch it overnight. But if they can't get access to either Hopper or the like the lower version of Blackwell, then you have to ask yourself, what are they training on? And if it's a non-US company chip, then they probably have moved away. I mean, it may not be as power efficient as an Nvidia chip is, but they are able to use a cluster that's a non-US chip cluster.
I mean, I'm trying to push back here, right? I feel like Chinese chip makers can really just steal the IP and try and copy it. That's how they've operated historically. And then there's also the question of return on investment, right? Caroline, you and Ed on your show every day talk to these giant hyperscalers. You talk to the customers. You talk to the people that are making the AI apps that work on NVIDIA's chips. And if they don't show a return on investment that's quantifiable soon, maybe they pull back a little bit on the margins in terms of their spend.
And I think that's what some of the negativity was creeping into this print. Like, is there around the edges the vindication that this report from MIT that 95% of these trials of AI applications just aren't delivering in terms of productivity and in terms of savings? But you didn't hear any of that from the earnings of these companies. In fact, you heard Alphabet scale up their capital expenditure, and they were rewarded for it. Their share price went higher. I think thus far people are giving the hyperscalers the benefit of the doubt. Don't get me wrong, they probably don't want some of the other companies, those that are desperately trying to compete with Salesforces and the like. They're not giving them as much bandwidth. They've got to have agentic AI working right here, right now. But I think the bandwidth is being given to the capital expenditure big players of the hyperscalers for now. And maybe look, think about, we always laugh about how much Microsoft, we're like reading into whether or not they've really got the data center licenses or the ongoing relationships there,
leases,
or whether they pull them back, whether they scale them up. We're always trying to get the devil in the detail. But I think more broadly, if you just take him at face value, Nvidia is saying they're there and they're there spending big, and $600 billion worth is a lot of capital expenditure.
All right, guys, it feels like we're just getting started, but we have to leave it there. Fantastic roundtable to kick off this show. Our thanks to Caroline Hyde of Bloomberg Tech. You can catch her at 11 a.m. Eastern, and Mandeep Singh of Bloomberg Intelligence. Meanwhile, let's take a look at the market right now. At the index level, we were talking about how Nvidia actually erased much of its losses pre-market. You can see that reflected on the big benchmarks. The S&P 500 now mildly positive. So too is the NASDAQ 100. The Russell 2000, which is kind of isolated from all of this Nvidia talk that we're having this morning, higher by about 0.5%. Let's take a look at some of the other stocks that are moving on earnings that aren't Nvidia with Bloomberg cross-asset reporter Isabel Lee.
Hey, Katie, we have to start with Best Buy. We have the company warning that tariffs continue to weigh on its business, and that's ahead of the crucial holiday shopping season. Shares are kind of up now by 1.5%, but it was down pre-market trading. So you see there, the stock is fluctuating. So this takes the shine of a quarter in which it boosted sales for the first time in more than 3 years. Again, the tariff comment shows the vulnerable position a company like Best Buy is in, whose product lineup is largely exposed to China. Up next, we're looking at Dick's Sporting Goods. The company raised their full-year outlook. This is a welcome sign, again, for strong consumer demand. This comes as the company prepares to acquire Foot Locker, and that's a sneaker chain. You see, though, the stock is seeing some pressure, down by more than 3%. So Dick's Sporting Goods now see comparable sales and EPS above its previous projections. The forecast includes expected impact from tariffs currently in effect. And lastly, we're looking at Victoria's Secret. So this is also good news for the company. The company raised its outlook after strong quarterly sales, and you see the stock there popping nearly 10% in pre-market trade. This signals that the turnaround plan of its new CEO, Hillary Super, is taking hold. So the company now expects full-year revenue to be higher than forecast, but its outlook includes an updated estimated tariff impact of around $100 million a year. That's double the previous projection. Back to you guys.
All right, Isabel, thanks very much. Isabel Lee there talking to us about some of the other movers that aren't Nvidia. Obviously, at $4.3 trillion in market cap, Nvidia towers over every other company, though. So we're going to continue talking about their earnings, dissect them, break them down, look at the outlook, and see what we can divine. Nvidia analysts have been looking past the company's tepid forecast, if you want to call it that, and lifting price targets. At least 10 of them have done so. Vijay Rakesh of Mizuho Securities joins us next. This is Bloomberg Open Interest. Let's get now to high interest. Look at what's making headlines around the world. And Five Below, it's raising its outlook, saying that it has passed on higher costs from tariffs to its customers who still embrace the chain's budget-friendly products. The CEO says another driver of growth was the global suspension of the de minimis exemption that allowed packages valued at less than $800 to enter the U.S. Without charging tariffs. The suspension gave Five Below an edge over online discount rivals like Temu. I believe that de minimis exception, though, comes to an end this week. Deli meat king Hormel is cutting its guidance, says it posts a disappointing quarter. The parent of Spam and Applegate brands cited higher commodity costs as the main driver of the weakness. The interim CEO expects the profit recovery to lag into next year, and you can see the shares down 13%. And we've got breaking news on Fed Governor Lisa Cook. Michael McKee's Bloomberg's international economics and policy correspondent. He joins us now with the latest headlines. Mike?
Well, Matt, we have now official confirmation that Lisa Cook has sued the president to keep her job at the Federal Reserve. The details of the lawsuit haven't yet been placed on the court's computerized system, but as soon as we have that, we will get more for you on exactly the grounds on which she is suing. But she has sued the president over his move to dismiss her from the Fed, as they said she would.
And Mike, I mean, bring us up to speed. Give us the context for what we're talking about here. We know that, of course, President Trump has been pressuring the Federal Reserve. Mostly that has been, up until this point, kind of focused on Chairman Jerome Powell. But, of course, he's turned his attention to Fed Governor Lisa Cook in the last week or so.
Well, there's a couple of elements to this, Katie. One is that the president could, in theory, if he can get rid of Cook, end up with a majority of governors on the Board of Governors. Whether that would translate into getting him what he wants, we still don't know. But it also may be, if she sues and loses, especially if she loses a request for a temporary restraining order to keep her job while this goes through the courts, then that that puts more pressure on Jay Powell, because then the president might think he could get rid of Powell without a court stepping in. It all's going to turn on the question of what for cause means, because the Federal Reserve Act says they can only be fired for cause, and the Supreme Court said that that is accurate, that they need a reason. So we will keep an eye on that and see what her argument is and whether that would apply to Powell as well.
Right. I mean, how likely is it that the Supreme Court questions the reason that the President of the United States gives, considering the fact that the Supreme Court has ruled in favor of the Trump administration in the lion's share of the cases it's reviewed this year? And the market, regardless of what your take on that is, seems to not really care about this. The 10-year yield is at 4.23 right now, and the curve is flattening.
Well, we don't have a decision yet. We don't have any kind of adjudication yet, so the market is kind of looking past this. There have been some signs in the long end that there is a little bit of concern about what might happen. But in general, it appears the markets are either going to wait for some sort of decision or they just believe that the president will not win this one. We don't know. As far as Powell and Cook's issue is that what the president's cause is something that she did before she came to the Fed in her private life. Does that rise to the level of for cause in the Federal Reserve Act? Generally, with government officials, it deals with behavior while you're on the job. But if they can make this for cause a private matter as well, then that might open up Powell or other members of the Federal Reserve Board of Governors to actions by the administration.
All right, Mike, appreciate your quick reporting here. That is Bloomberg's Michael McKee. Just to bring you that headline again, Fed Governor Lisa Cook has filed a lawsuit challenging President Trump's attempt to fire her over claims that she lied on mortgage applications. That was filed in federal court in Washington today. The complaint not immediately available. We'll bring you more updates as we get them. But let's turn back now to Nvidia. Of course, that is the stock story of this morning. And despite forecasting slower growth, Vijay Rakesh, Mizuho senior analyst, remains bullish on the company, writing, quote, "We see Nvidia remaining the leader here in the AI training and inference chips for data center applications." I'm pleased to say that Vijay joins us now. He has an outperform rating on Nvidia. So put these numbers into context, because it seems like the initial knee-jerk reaction was disappointment, maybe that the forecast wasn't really beating expectations here, Vijay. Now it seems like the market's trying to decide how it actually feels.
Yeah, thanks for having me on, Katie. I think if you look at the data center numbers, they definitely came in line to what the street was looking for. And so that was a little bit, more downside to what the very optimistic assumptions on the street was. But that said, if you look at the AI space, I think no other space in the semiconductor market enjoys the visibility and the long-term capex outlook that the AI space enjoys. And if you look at what Nvidia is talking about, there's a 3 to 4 trillion AI capex that they have line of sight to over the next 5 years. That's a significant TAM that Nvidia is chasing, and they are the leaders in it. So while you have some near-term numbers that are kind of in line, you can't miss the long-term outlook here, which is very significantly positive for them. So we think this is kind of still the name to own in the space.
Vijay, Jacob Bourne over at eMarketer says these results showed hints that spending by giant data center operators could tighten at the margins if near-term returns from AI applications remain difficult to quantify. And this is the kind of thing that investors write in and comment on every day. The ROI, is it there? Will it materialize? Can we quantify what it's going to be? Because otherwise, maybe Google doesn't want to spend $80 billion in CapEx. Maybe Meta isn't going to keep spending $100 billion a year on this.
Yeah, hi, Matt. So just if you look at this whole CapEx commentary, I think what we have seen is over the last 3 months, which is a pretty short period, you have seen CapEx from the top 4 CSPs get raised from about 28-30% entering the year to 50% plus for calendar 25. So you are seeing CapEx actually accelerate. And even if you look out to calendar 26, we have CSP spending, the cloud spending for AI, growing 17 to 20% year on year. So there is still significant growth coming. Talking about Meta, they are obviously spending a lot on super intelligence, but they have already kind of pointed to maybe a 40% CapEx growth into next year, close to the 100 billion number, 95 billion number that you talked about. So this CapEx continues to grow, and you are seeing multiple business models on the reasoning side, like Anthropic, Perplexity, etc., Mistral, Cohere, all do very well, and the valuations there also get significant upside. So this continues to be a very long-term roadmap for semis and the AI space. So.
And Vijay, I know that you have an outperform rating on this company, but I'm really curious to hear what you think the existential threat is here. Matt brings up this point all the time, and I think it's a good one, that you think about how the fiber network was overbuilt, for example, that maybe some of these big tech companies rethink their CapEx spends in the years ahead. Is that the existential threat, or is it maybe the idea that if Nvidia can't access the China market, that some of those homegrown competitors actually will be able to take share and compete here?
Yeah, I think that's a good point, Katie. I think if you look at the AI space, the big spenders today are still the CSPs. So you always have the risk that the CSPs could slow down, that they might want to focus a little bit on the free cash flow. But that said, what we are seeing here in the next couple of years is a pretty big focus on building out the AI space. There's still a lot of dollars to get there, a lot more efficiency and performance that can be driven from the AI side. So you're still seeing CSP spending grow, but we are also seeing a huge couple of new vectors in AI server growth, from sovereign spending growing 100%, and it could possibly expand into 26 as the Middle East shipments start to pick up. But also enterprise tier 2 spending from the likes of XAI at Tesla and Grok, but also Oracle OCI spending up significantly into next year. So you're seeing some other vectors also start to pick up alongside the CSPs, which should definitely help the 2026 outlook. And to that, add to that the whole China side, right? At this point, they're not shipping anything into China. They're talked about a 2 to 5 billion per quarter tailwind into 26 if those licenses get approved. So there is still potential for upside to the numbers that they laid out. So,
I've been thinking about this China problem because there were zero China sales in Q2, and they didn't initially include a forecast in Q3, although the CFO now says maybe 2 to 5 billion in China sales. But there have been multiple signals from the Chinese Communist Party through various regulators that they do not want Chinese companies buying Nvidia chips, be they H20 or H20 or any newer chips. And historically, China just steals IP and then, makes their own version. Aren't the Chinese going to do this with Blackwell chips as well, maybe even with Rubin?
Yeah, no, absolutely. There's been a lot of noise around this, and it makes a lot of sense that China would want to, hold off on importing H20s or B20s so they can develop their homegrown domestic AI. But that said, the commentary from Nvidia on the call definitely says there is demand for even H20, which is, let's say, 1.5 years old, 2 years old, and to the tune of almost 2 to 5 billion a quarter. And so if they can move forward, ship those, but also develop a toned down D-spec B40 or B30, that could be the next driver as well for 2026. If they can make it, it's taped out and it gets licensing from the U.S. government, obviously. But I think from the U.S. government side, they also get a 15% take on the revenue. So we think that there's a possibility for approval down the road on both of those products.
All right, Vijay, great to get your take. Really appreciate you joining us. Vijay Rakesh there of Mizuho. In the next hour, we're going to talk AI investing with Winston Ma of the Global Public Investment Funds Forum and Joe Kaiser of Mercato Partners. This is Bloomberg Open Interest. We are just moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. It looked like, before last night that whatever Nvidia did would almost change the narrative for this market, or at least continue the momentum train, as Kim Forrest told us. But right now, it feels like nothing is changing at all. S&P futures are unchanged. Although, look at that, 6,500. So we're at a high level there, and we will be on the cash trade as well. NASDAQ 100 futures unchanged. Russell 2000 futures, actually the small caps are up about 1/3%, but as Katie says, they're relatively disconnected from the Nvidia story. At the NYSE, you have some sort of non-publicly traded company or a council, some organization ringing the bell. It's August, folks, in the slow doldrum days of the summer. You at least have a public company traded here, OMSE, ringing the bell. OMS is the ticker there on the NASDAQ. Of course, nothing matters besides Nvidia. Even Five Below earnings didn't get me to look away from the AI story. And you know I know you love. I love Five Below.
Everyone loves a deal. Anyway, let's talk about Nvidia. Looks can be deceiving. You don't see too much movement right now. Of course, we know that it was much lower pre-market, down about 3% after it signaled that growth is decelerating for the first time in 2 years, really adding to concern that the pace of investment in AI systems is unsustainable, and whether or not we're actually going to see returns from all of that capex being funneled into this company. But Nvidia shares currently about 1% higher. Traders really digesting what exactly we heard from the company and from Jensen Huang last night, Matt.
All right, watching the other Mag 7 stocks, because they are, for the most part, Nvidia's customers. The four biggest data center operators, cloud operators, hyperscalers, whatever you want to call them, that you see here, Meta, Microsoft, Alphabet, and Amazon, make up 40% of Nvidia's revenue. And with the exception of Facebook, the Facebook owner Meta Platforms, they're all in the green today. Joining us now is Sanctuary Wealth Chief Investment Strategist Marianne Bartels. And Marianne, let me first get your take. We know and love you because of your technical analysis, but everybody has a view on Nvidia, what the earnings meant, how that signals for the rest of the year on the stock market. What's your take?
Well, I'm going to put it in a broader context. As you know, I've been a big fan of semiconductors. In fact, for the past 3 years, my argument has been that semiconductors are the true leaders within this marketplace. And Nvidia does remain the key leader, particularly in AI. We're going to have some quarters that are great for Nvidia. We're going to have some quarters that might be a little bit more lukewarm, but it's not going to change the trend in semiconductors. The demand for AI and just the demand for chips overall, as we're in the digital era, are going to continue to grow. So on any pullback, and even at these levels, I am still very bullish the semiconductor space.
Interesting. And when you say bullish the semiconductor space, is this a pyramid that just descends from Nvidia? What are some of the other names that you think actually could close the gap? Because right now it just appears that Nvidia is dominant.
Well, it's dominant in AI. They basically have created this whole space. And we haven't seen really a competitor come up yet. You'll hear about AMD, but they're not there yet. So really what I've learned through the years, when a company comes out with a leading technology that the market wants to own, they dominate 80% of the market. And at least right now, I think that's the trend that Nvidia is on, unless it's proven otherwise.
In terms of the technicals, when you look at Nvidia, what do you see? Can you make out a pattern? It, for the most part, has just been up, right? 35% this year, 171% last year, 238% the year before that.
So if I take a long-term view, not, day-to-day, week-to-week, quarter-to-quarter, I think the market has just gotten too focused shorter term. I'm bullish the market out to 29 to 2030. I think the S&P is tracking towards 10,000 to 13,000. In that context, you can eventually see Nvidia trade up near 300. I don't think that's a straight run, We're going to get corrections within that. But the longer term trend in Nvidia from a technical perspective remains extremely bullish.
Extremely bullish there when it comes to the technical perspective. Let's talk about other sectors of this market, though. It's interesting, even with Nvidia's drawdown earlier today, you did see the S&P 500, at least at the index level, appear resilient in the pre-market. What does that say about where we are when it comes to the breadth of the rally that we've been experiencing?
Well, the breadth of the market has been expanding, and you certainly see that through the Russell 2000. But the advanced decline line that I like to look at is the S&P. And that has already reached a record all-time high. Last Friday was a very important day for the markets. It was, what we call a 90% up day in breadth. 90% of the issues actually advanced. And that's extremely bullish, especially in the doldrums of the latter part of the summer. It's a confirmation with breadth hitting a new high and, such a strong move in terms of a 90% day that we remain in a very strong bullish trend. Doesn't mean that we can't get a pullback in the fall. I think the market is acting a little tired. I don't think we're out of the woods for September or October, but I still think at year end, it's possible that we're going to see 7,000 on the S&P 500.
You said, though, that momentum is slowing here. We see it every day, in the past couple of weeks, Marianne. So do we get a near-term dip before that, or how does this change from flatlining to either moving up to a new high, again, we're not that far away from it, or moving down?
So the indicator that I'm looking at is actually the VIX volatility index. It's trading around 14 right now. If we start getting around 12 or 11, I think that's a red flag that we could get a pullback, maybe 5 or 10%. I'm not looking for anything significant. I think this Friday, coming up with core PCE will be very important because the market pretty much is locked and loaded that the Fed is going to cut interest rates. And I didn't take that away from Powell's speech. What I took away was he opened the door to the possibility of a rate cut, but I don't think it's a guarantee. So I think watching the jobs data, watching core PCE is going to be really important in terms of how the market really prices in where interest rates are truly going. And if you look at the 5-year break-evens, they're ticking up. It seems that the bond market does not want a rate cut here. So I think that part of the market could add a little bit of volatility.
Yeah, that's interesting to hear that. And it's a good reminder to your point that we have PCE data coming tomorrow. We are 8 days out from the next jobs report. Let's game plan here. Let's say that we don't actually see a rate cut from the Fed next month, which would certainly be a surprise looking at the pricing here. Which area of the market would that hit the hardest at this point?
Well, obviously, it's going to hit the growth stocks, the tech stocks. The stocks that are up the most are going to come down the most. I still believe we're in a mega cycle for growth. But if we do have a correction, you're going to see the value part of the market rally. But I don't think it's sustainable. So I don't think clients, if you're a long-term investor, you really just have to ride out the volatility. Traders can come in and, move around their book a little bit. But I still think, again, as we go out to the end of the year, we're tracking higher and we're going to continue to hit new record highs in this market.
All right, Marianne, that's a good place to leave it. Great to get some time with you. That is Sanctuary Wealth Chief Investment Strategist Marianne Bartels. Let's get a check on the stock market right now. We're just over 8 minutes into the session. You can see pretty quiet at the index level. Once again, the S&P 500 higher by just about 0.1% here. You take a look at the split of gainers versus losers. You can see you have more than 200 names in the green right now, slightly more in the red. It's interesting, the fight that's going on in the tech sector right now, because up at the top leading gains, you have Broadcom higher, up by about 2.7%, Microsoft, Amazon, Alphabet, Meta, tech having a good day. But then you take a look at the downside. It's going to be hard for the S&P 500 to get much higher right now when you have Nvidia off by about 0.4%. Not a huge decline, but we're talking about the biggest company that's going to do it. We're highlighting Johnson & Johnson as well, down about 1% right now. Let's take a look at the sector breakdown. You can see that fight that I'm talking about because tech As a sector, higher by 0.4%, even with Nvidia lower. Communication services also rallying, consumer discretionary, some of your biggest gainers today. Then you take a look at the downside, energy, consumer staples, and healthcare. That ties back to Johnson & Johnson. Healthcare, your biggest loser on the sector level right now, down by about 0.6%, Matt.
All right, so struggling to get anywhere except for the all-time high where we closed yesterday, and actually making another all-time high again today. So these little tiny movements are almost not notable, except for the fact that we've never been here before, right? We're getting closer and closer to
uncharted territory.
60. There you go, uncharted, not unchartered,
no.
as a lot of people say. Some people even write uncharted territory, unless you haven't chartered it yet. Coming up, analysts are staying bullish on Nvidia, despite its not necessarily inspiring forecasts. That's next. This is Bloomberg Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Five Below is getting upgraded to a buy at Telsey after the discount retailer raised its profit outlook. The analyst says its strong business momentum should continue in for the rest of the year and into 2026. Shares up about 3%. Next up, Wall Street weighing in on Kohl's after the retailer raised its outlook and issued better than expected earnings. At least 4 banks have increased their price targets on the stock, and Gordon Haskett is raising the company to a buy, saying that management has made progress in its efforts to reconnect with its core customers. Shares down a little bit today, but it had quite a rip-roaring rally yesterday. And finally, analysts at major Wall Street shops are sticking by Nvidia after the world's most valuable company forecasted decelerating growth. You had at least 10 firms hike their price targets on the stock, including JP Morgan, Citi, and Jefferies. Shares still deciding what to do, Matt, currently down about 0.6%.
All right, so we're going to keep watching that, obviously, keep talking about it throughout the program. Another analyst bullish on Nvidia's future is Dan Ives of Wedbush. He spoke earlier on Bloomberg Surveillance.
When you look at data center and then you actually factor in what China's going to be when you look at 2 to 5 billion and you look at the acceleration in the next few quarters, I mean, there's no region that's not accelerating. That's why I believe there's a $5 trillion market cap, either by year end or early 26.
All right, so it's no surprise that Dan Ives is bullish. But he has been right. Let's talk about that with Bloomberg Equities reporter Carmen Reinecke. She joins us here on set. So, Carmen, he's almost always bullish, most tech firms that he covers. But, the trend has been up and to the right. So can you really fight this momentum?
That's a really good point. And I think a lot of Wall Street analysts we're seeing, they agree. They're very bullish on shares of Nvidia. Katie just said at least 10 analysts increased their price targets today. I was just looking. We have them rolling in as we're talking even. That means the 12-month average is now $205 for Nvidia shares. That's more than 13% upside. So I think a lot of people are really joining in on the momentum. They see a long-term case here for Nvidia shares to continue to go up. And even though the earnings report might have been a little bit less than people were hoping for, they see it overarchingly as sort of a minor imperfection, a bump in the road, and something that will ultimately, be worked out in the end.
Just for fun, Dan Ives, he has 44 buy ratings, 6 hold ratings, 0 sell ratings. So he has yet to meet a stock that he doesn't like. But to your point, what we're talking about here, the fact that you're seeing price targets getting lifted, even though by some measures this was a little bit underwhelming. We were speaking with Vijay Rakesh of Mizuho a little while ago, and he made the point, Nvidia has the luxury of kind of being the only game in town here. The moat that they've built, the competitive moat, it's going to be very difficult to cross.
It's true. And we even were watching a Chinese company yesterday, Cambricon, that reported earnings, and they saw increased demand from Nvidia not being able to sell in China, and they still shouted out Nvidia, saying that they have the clear advantage. So you're totally right. They are, in a lot of ways, the only game in town. And I think that there's still a lot of positive things to come. We saw the news today. There was a Fox headline about potentially selling Blackwell into China. That's something people have been really excited about. And I think it just shows that this is an ever-moving situation, right? Even when we get the earnings snapshot, we hear Jensen speaking. this can change day by day.
Yeah, I mean, not everyone's excited about the U.S. selling Blackwell into China, right?
That's true.
It would be a national security problem, for one thing. It's illegal right now. And they would have to pay 15% of their revenues to the U.S. government. That would be great for us, right? For all three of us, I guess we're all
think Nvidia is
U.S.
too psyched
citizens.
about that.
But they don't seem, it feels like they're kind of walking back from that agreement, at least in Ed Ludlow's interview with the CFO. And it's also not clear that the Chinese companies necessarily want to buy chips from Nvidia, right?
Yeah, it's true. I mean, the recommendation from Beijing has been to stay, homegrown, use local chips. But the Blackwell really is, the premier design right now. And so a Blackwell chip in China, analysts are excited about that. Investors are excited about that. And yeah, it remains to be seen.
All right, Carmen, really appreciate the roundup there. Taking a pulse of Wall Street right now, how they feel about Nvidia. That is Bloomberg's Carmen Reinecke. I do want to go back to that interview that Ed Ludlow and Ian King had with Nvidia's CFO. Colette Kress said specifically, "We have been communicating. If nothing shows up, I've got licenses. I don't have to do this 15% until I see something that is a true regulatory document." So the CFO saying pretty much, show me to the government.
Yeah, absolutely. And they seemed very cautious as well about the legality of this situation. Export taxes are historically not allowed, certainly not encouraged.
Yeah.
So, there's a question as to whether or not this will fly if there are court challenges.
Absolutely. She made that point as well. Really great interview. Of course, we'll continue to follow Nvidia, but we're going to talk about something other than Nvidia coming up next, because Best Buy sales beat estimates and says demand is offsetting the impact from tariffs. Traders wary on that stock today. We'll discuss next. This is Open Interest.
This is Open Interest. I'm Matt Miller. Let's take a look at stocks, which are now turning lower just about 20 minutes into the session. The S&P down 0.1%. The NASDAQ, although unchanged, there's a red arrow there. Small caps are still treading water, but just barely. One of the problems, or the big problem, is Nvidia. Take a look, down 1.9% now and falling. So Nvidia, although it had turned positive just before we started trading, is now down almost 2%. And when it's a $4.3 trillion company, that makes a big difference. I mentioned how much I was paying attention to Five Below, and look at that. They're up 4%. Not that it matters. Victoria's Secret up 9% as well, but even those two together aren't enough to outweigh Nvidia. And then Best Buy is falling, Dick's Sporting Goods as well. We're going to talk about that right now. Katie?
Let's get a little bit more detail on those retailers with Bloomberg Intelligence senior retail and consumer analyst Lindsay Dutch. And we'll start with Best Buy since we have the bigger move there. So they beat estimates when it comes to demand that they're seeing for gaming, for computers. We know that they're watching tariffs here. How do you rate this company when it comes to how they're actually navigating some of those headwinds?
Hi, Katie. Hi, Matt. Thank you for having me. Yes, tariffs are definitely a headwind here. And I would say Best Buy is doing a great job managing the cost side. I think the really big concern is more on the demand side. So how is the consumer going to react, especially for holiday? Obviously, a very big, point for this type of a retailer. What could those higher prices impact on the holiday season, especially in some of the weaker categories?
So what are the weakest categories? I mean, what are the problems for them?
Exactly. So home theater and appliances are still the two biggest, weakest categories by far for Best Buy. Obviously, we saw strength in the second quarter on gaming. That was aided by Nintendo's Switch 2. We're seeing strength continue in computing and phones, and that's sort of supposed to extend into the third quarter. That big worry bead is really on that entertainment and the appliances, which, if we were to see a drop in interest rates and a pickup in the home market, that certainly would help.
Certainly would help. I think you can say the same across industries, too, when it comes to interest rates. But talk a little bit more about Dick's. So it did see its sales climb. It raised its outlook as well. You're not necessarily seeing that reaction in the stock right now. We also know that they're closing on Foot Locker next month. I mean, give us a pulse check here. What do you make of Dick's at this point, where they are in their story?
Yeah, so Dick's is sort of a completely different story than Best Buy, right? Best Buy is on the cusp of a turnaround. They're really looking to spur that sales growth turnaround that they've been, missing for the past 3 years. Dick's is completely on the opposite. They're coming off of strong momentum, really strong results for the past couple of years. We saw another beat in the second quarter. I don't think it was tremendously surprising. I think a lot of, investors and analysts thought the guidance was pretty conservative coming into the second quarter. But the bottom line is we saw demand continue to strengthen in the second quarter. Guidance is still implying sort of a back half slowdown. And, we're not really liking that. We think that demand still looks solid. We think that growth can extend, but the guide is telling a different story.
What can we see about the Foot Locker acquisition and whether or not that's working?
Right. So Foot Locker, they got their regulatory approvals earlier this week. The deal is expected to close on September 8th. None of that is factored into the guide for the year. I think Foot Locker is going to be a big test for Dick's. Dick's has proven that they've been able to turn around their own business and really fuel very strong demand for their sports assortment. And they've even gone back into brick and mortar expansion, which is a complete shift from the past couple of years when many retailers were closing stores. Foot Locker is in the early innings of its turnaround, and Dick's really needs to prove that they can do this a second time with a retailer that's skewed a little bit more to lifestyle and a little bit more to a lower consumer, which is going to be a harder lift in this environment.
Lindsay, thanks very much. Lindsay Dutch joining us there from Bloomberg Intelligence. Coming up in the next hour, we'll talk Nvidia and the markets with Larry Adam of Raymond James. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Not too much happening at the index level. And coming up, we'll talk about why Nvidia, the world's most valuable company, signals that growth is decelerating after a staggering 2-year AI boom.
Meanwhile, on the data front, the U.S. economy expanded in the second quarter thanks to a pickup in business investment, potentially related to that AI story.
And Fed Governor Lisa Cook files a lawsuit challenging President Trump's attempt to fire her, kicking off a historic fight. Let's get more insight on Cook's lawsuit. Michael McKee, he is our international economics and policy correspondent. He's been parsing the complaint. He joins us now. So, Mike, we talked to you just as these headlines broke less than an hour ago. What have you learned since then?
Well, we got the substance of her case that she has filed now, and it's pretty much as expected. The argument is that the for-cause reasons that the president cited, the allegations against her, are invalid because they are just allegations, and she was not given a chance to respond to those. And that means she was deprived of her right to due process. What the lawsuit is asking is that the allegations refer to events before her nomination, and they ask the court to void her firing and declare her an active member of the Federal Reserve Board. They seek the court holding that Fed governors can only be removed for inefficiency, neglect of duty, malfeasance in office, or comparable misconduct. In other words, the usual things that are counted as for cause, as opposed to something that happened before she became a member of the Fed. Yeah. In the lawsuit, she says, her lawyers say, allowing the president to remove members of the board over policy disagreements would also render illusory the board's independence. So they're wrapping the two issues together, her right to stay on the board and the danger to the Fed of losing its credibility because of the firing and people seeing it as political.
Well, if you say there's a danger of the Fed losing its credibility, that makes one big assumption to begin with, right? that the Fed has credibility. Well, and I would also point out that the Supreme Court has sort of carved out the Fed as separate from other institutions. So we don't really have any precedent as to what for cause would mean in this case, right?
Well, we do in the sense that the idea of inefficiency, neglect of duty, malfeasance in office are the standards that have been used in prior cases. They don't, and they are in the law for some other agencies, but they're not in the law for the Fed. And basically, this will turn on whether or not those are the reasons that the president could order somebody fired and whether her mortgage situation rises to that level. So lawyers are saying that's going to be kind of a high bar to get to. But remember, this is just essentially a preliminary request for an injunction to keep her on the job while all this works its way through the courts. If it goes the way we saw with the head of the National Labor Relations Board, Gwen Wilcox, the lower court will grant her that stay. Then the administration will take it to an appeals court. Now, in the Wilcox case, the appeals court said that she could be removed from office. So they took that to the Supreme Court, and the Supreme Court then said in this ruling that included the for cause issue that Matt's talking about, that Wilcox could be fired or until the process is adjudicated. One of the issues here is if that happened, then the president, in theory, would put in a substitute Fed person, and that person would vote on policies and have an impact. And then what if the Supreme Court decides that Cook is right and says she should be reinstated? So it's a very complicated situation going into this.
Yeah, and the timeline is complicated as well because the next FOMC decision is on September 17th. We are weeks away. Lisa Cook, of course, is going to be voting in that meeting. And there is a question here about whether they will get that injunction, whether she will be still in her job at that point.
Yeah, we're waiting to see which judge this is assigned to in the U.S. District Court in Washington and how quickly they schedule a hearing. We hope that we will get a hearing scheduled by the end of the day, so we would have some idea of how this will play out on a timeline. And then we don't really know how I can imagine that if she is allowed to remain in her job by the lower court, the administration would file the same day an appeal to the District Appeals Court. But whether they would hear that before September 17th is an open question. Courts can move fast when they want to, but in general, what we've seen with Trump's firings is a little bit more speed, but not the kind of immediate request for relief that people have asked for.
All right. I just wanted to give a little bit of programming advice. June Grasso's show on Bloomberg Radio at 6 p.m. every night is an excellent encapsulation of what's going on in the current legal environment. And I'm sure she's going to be digging deeper and deeper into this. I'm already looking forward to 6 p.m. tonight.
Got a lot of daylight to burn between now and then. Looking forward to that.
Mike, thanks so much. Mike McKee, I'm sure we'll talk to you more as well throughout the day about this. But let's turn back to the big story of today's trading. That's Nvidia, the chip maker forecasting a deceleration in AI growth after an incredible 2-year boom and really still some serious growth. We spoke to Vijay Rakesh, Mizuho senior analyst, last hour about Nvidia's prospects in China.
That China would want to hold off on importing H20s or B20s. There is demand for even H20, which is, let's say, 1.5 old, 2 years old, and to the tune of almost $2 to $5 billion a quarter. And so if they can move forward, ship those, but also develop a toned down, de-spec'd B40 or B30, that could be the next driver as well for 2026.
And Nvidia CFO spoke to Bloomberg about the president's revenue sharing plan, saying, quote, "When I first heard it, I said, I am sorry, where's the regulation? I said, no wired money goes out of this company based on someone told me, cannot do." Some fiery words there from Colette Kress. Joining us now is Raymond James Chief Investment Officer Larry Adam. Larry, it's great to have you with us. I take a look at your year-end price target, your 12-month price target for the S&P 500, 63.75. We are above that right now, and we have plenty of things that we could get worried about when you think about the state of corporate America, our biggest company out there, giving what some have called a tepid forecast. You think about the state of trade policy, and then you think about valuations. You add it all together. How do you feel about this market?
So as you just mentioned, we're a little bit more cautious on the equity market here going into the next couple of months. And I think it's important to recognize that this has been a summer to remember. You know, since Memorial Day, the S&P 500 is up well over 10%. That's the third best summer that we've had in basically the last 40 years. And if you look at the amount of pullback that we've had, the biggest pullback that we've had during this summer has been 2.5%. Usually you get about 7%. And then when you talk about the breadth of the rally, all 11 sectors have been positive so far throughout this summer. That's the first time that that's happened since 2017. My point is that there has been a lot of good news priced into the market, and we just think that this is a period of time where we should see a consolidation because, as you've mentioned, you have seen valuations move to the upper levels. We're right now in the 94th percentile of valuations.
So what kind of consolidation do you expect to see, Larry? I mean, if I'm looking to get into this market, how far do I let it fall before I buy?
Well, it wouldn't be unusual to see a 5 to 10% pullback, right? You usually get 3 or 4 of those a year. We haven't had that many over the last year. So I would look for at least 5 to 10% over the next couple of months here. And that would provide a nice opportunity as the market goes into next year. Because I do think the more important story is that if you do get a pullback, it's likely going to be a buying opportunity because the underlying fundamentals are healthy. The Fed is going to start cutting rates. We're still looking for double-digit earnings growth going into next year. A lot of these themes that we've been talking about, and you just mentioned, AI, defense spending, the electrification, those themes all remain in place and should continue to drive the earnings power of the S&P 500. The only difference is I think earnings have to take us higher on this next leg, not just PE expansion.
Larry, it's interesting to hear you say that. I mean, it's an optimistic bent when it comes to these potential pullbacks we could have. Is that a blanket buying opportunity, or would you be picky within where you're shopping for bargains?
Yeah, I think you have to be very selective here. You want to be in the areas that have the best earnings growth. And those areas continue to be within the tech space. I do believe that if you look underneath the covers here, I do think that healthcare has continued to have a negative cloud over it. But if you look at their earnings, they still have very good earnings growth. And I think as some of these clouds kind of dissipate, I think that they'll start to reflect the earnings power underneath that particular sector. So I do like healthcare. And I do think industrials, because of the AI build out, defense spending, electrification, they have a lot of catalysts to continue to help their earnings continue to move higher well into next year. The areas I'd be more cautious on are the consumer, because I do think as we go into the latter half of this year, I do think that tariffs are going to start to bite. And I think that that's an area where you have very, very low margins to begin with. That could continue to crimp their earnings going into, again, the back half of this year. So that's an area I'd be a little bit more cautious on. Another area I think is controversial right now is small cap, right? I just don't see the momentum in small cap earnings. People forget to realize that 10 out of the last 11 quarters, earnings for small cap companies have actually been negative. Right, and that's been in a good economic environment. So I really need to see the momentum before I'd get more optimistic in that small cap area.
Do you worry that the Fed may have to raise rates if you think tariffs are going to bite? I mean, do you worry that prices are going to rise, and even if we get a cut now or 2 or 3, that the Fed's going to have to turn around? As Ken Rogoff recently told us, he thinks the Fed is going to have to reverse course and start raising rates next year.
No, we don't fall into that camp. We believe, as Chairman Powell said, I think it's transitory. As we do our forecasting, yes, you are going to see an interim bump in inflation, but I think that disinflationary trends are still in place. Whether that's coming from some of the competition from overseas, whether it's coming from real estate prices that are softening. And remember that, if you look at real estate and owner's equivalent rent, that's still around 30% of CPI. Right? And that should continue to move lower. So I really don't see the big spike in inflation coming. And that's why we have 2 cuts priced in this year and at least another 2 cuts priced in for next year, because we do think that where the Fed funds rate is right now, it is mildly restrictive for this economy.
All right, Raymond James, Chief Investment Officer Larry Adams, great to get your take. As usual, appreciate the intel this morning. Coming up, how should investors feel about Intel in light of the U.S. taking a stake? We'll speak to Winston Ma, the Global Public Investment Funds Forum at New York University next. This is Bloomberg Open Interest. Let's get now to high interest. Look what's making headlines around the world. The U.S. economy expanded in the second quarter at a slightly faster pace than initially estimated on a pickup in business investment and an outsized boost from trade. The turnaround in GDP followed a first quarter contraction that was the first since 2022 as companies raced to import goods ahead of tariff hikes. U.S. Health and Human Services Secretary Robert F. Kennedy Jr. said the Center for Disease Control and Prevention, the CDC, isn't sufficiently aligned with President Trump's agenda and it needs an overhaul. His comments come one day after the White House fired the director of the CDC following an intense clash over vaccines. We're going to talk about that story a little bit later on. And Florida Governor Ron DeSantis is trying to largely wipe out property taxes in order to recoup those funds. He's taking a page from Trump politics with his own version of the Federal Department of Government Efficiency. The Florida Doge would scrutinize municipal finances to identify potential waste. Florida is also a state with no income tax. So how would they raise money? That is a fascinating story. Let's switch gears, though, to essentially to tariffs, and I'll get to why. The U.S. is building a sovereign wealth fund with American characteristics. At least that's the viewpoint of our next guest, Winston Ma. He's executive director at NYU's Global Public Investment Funds Forum. He says the Trump administration is launching a decentralized, transaction-driven sovereign wealth fund with stakes in MP Materials and Intel, as well as involvement in Nippon Steel and TikTok. And that will be funded with revenue from foreign, from tariffs, as well as from, the take that the Trump administration gets from chip sales at Nvidia and at AMD. Let's bring in Winston, formerly managing director and head of North American office for China Investment Corporation. That's China's sovereign wealth fund. He's also the co-author of The Hunt for Unicorns: How Sovereign Funds Are Reshaping Investment in the Digital Economy. Winston, you have an incredible resume to talk to us about this because you are a lawyer. You studied mechanical or electric engineering, semiconductors essentially. You ran the North American business of the Chinese sovereign wealth fund. And even though the U.S., Howard Lutnick recently said we're not starting a sovereign wealth fund here in the U.S., you say that's what they are doing, essentially.
Yes. Yeah. By the way, I'm a long-term New Yorker, too. Yes. Yeah. So when you think about the U.S. sovereign wealth fund by Trump, it comes from a very different direction because traditionally, sovereign wealth funds manage a wealth, right? Like the Middle East sovereign wealth funds, they manage the oil money for financial returns. But here, the U.S. is a deficit country, and there's no legislative authorization from the Congress to allocate a budget for this sovereign wealth fund. So the most unique thing about Trump's sovereign wealth fund is the source of capital. Three very interesting ways. One, from existing legal authorization in specific areas, like Pentagon's investment in MP Materials was based on DPA, Defense Production Act. And then the second, more interestingly, maybe never seen before, the trade sales sharing, right? For Nvidia, AMD, they agreed to 15% sales kickback to the U.S. government in order to get to the export license, right? And then finally, maybe the most unique, right, is that for the most part, this U.S. sovereign wealth fund may be financed by foreign capital because in connection with the tariff agreements with Japan, Korea, and to some extent EU, they all agreed to invest several hundreds of billions of dollars into the U.S. at the guidance of the president. Yeah, so soon we may see a very large sovereign fund of the U.S. based on foreign finance.
Yeah, absolutely. That has been a component of many of the trade deals that we've seen being discussed in recent weeks and months. You recently wrote a blog for the CFA Institute writing that investors should pay attention because state-backed capital is no longer theoretical. Expand on that a little bit and why investors really need to keep their eye on what's happening.
Yes. Yeah. Certainly, sovereign wealth funds investments will bring complexities to deals. But to start with, right, actually they bring interesting opportunities as well. Because in these strategic investments that the Trump administrations are working on, actually the government is working both as a co-investor and a strategic partner, right? Because in the MT Materials, the Pentagon agreed to purchase all the rare earth production from this company. And for Intel, maybe Trump administration can persuade Nvidia, AMD to use Intel service to build up Intel's capacity, right? So for all these, there are strategic angles in the deals in addition to the financing itself. So that's why we see private capitals coming in after the Trump administration's investments. For example, Intel situation, Masayoshi Son's SoftBank bringing in an additional $2 billion, right, for another 2% of the company. And in the MP Materials deal, after the Pentagon investment, $1 billion debt financing was mobilized from Goldman Sachs and JP Morgan to add to the project financing of the company.
I'm interested in, just because of the kind of zeitgeist of social media today, in the TikTok angle.
Yes.
What do you think is going to happen with TikTok? Because the president, of course, he originally was very much against TikTok. He thought that was a way for the Chinese government to spy on U.S. citizens. Probably is. But now he's very much for TikTok, and he keeps delaying the deadline by which it has to be sold off. How do you think he's going to deal with that?
Yes, yeah. So, the TikTok case is a very interesting case study about how many different aspects that the national security can be, right? Because during Trump's first term, he wants to shut down TikTok based on data security issue, data privacy issue of American citizens, so on and so forth, as a national security issue, right? But now he probably looks at TikTok as like the most powerful social platform and a platform with a powerful AI algorithm. So maybe he sees a different angle of national security concern to keep it alive. So I think he will definitely seek to find a deal, but China is also looking at this as a strategic AI story. So the Trump side definitely need to work with China to get to the China side approval to get the deal done.
You know, on the national security angle, the Stargate project, you mentioned Masayoshi Son, right, has been one of the things that Trump pushed hard for. He wants the U.S. to have a leg up in AI. That will be the best, national AI, I guess, environment in the world. It's highly likely that that's the case. But what do you think about the Stargate project? Will that come to fruition?
Yes. Actually, I think Stargate might find the best partner in the U.S. sovereign wealth fund that Trump is putting together, because globally, infrastructure investing is a big part of the global sovereign funds. When you look at the Middle East sovereign funds or the Canadian pension funds, a lot of their portfolio will be infrastructure investments, right? So here, U.S. Is going to be a big investor in the data center, digital infrastructure sector because of the new White House AI action plan, right? In connection with the AI action plan July, Trump gonna accelerate the license and the approval process for data center projects in the U.S., right? So we will see a big push into these projects, including Stargate. And for long-term projects that has a kind of long payback circle, the long-term capital of government capital can become an anchor to start the project and then attract more private equity, private debt into the project to form a nice public-private partnership.
By the way, Winston, just to wrap this up, you seem pretty bullish on this sovereign wealth fund. You think it's going to be successful?
Well, I think it can create opportunities for the market where strategic angles and private interests can merge, like in the case, for example, the Intel situation. But at the same time, right, sovereign funds always create complexities. In some contexts, creates conflicts in terms of what is good for the company and what is good for the country.
All right, Winston, great to get your take on this. I really appreciate it. We'll keep in touch with you. Winston Ma, there used to run the CIC here in the U.S. He now works at NYU. This is Bloomberg Open Interest.
I think the boom's just starting. I mean, if you look at these numbers, especially when you factor in what China is going to be, I mean, Jensen talked about 50 billion, 50% type growth number. This just shows the next stage of adoption is actually just starting.
And that was Dan Ives of Wedbush speaking earlier on Bloomberg. For more on the future of AI investment, we welcome in Joe Kaiser, Mercato Partners CEO and managing partner. Joe, I want to get to Nvidia in a second, but we just had a really fascinating conversation, not unrelated, with Winston Ma, formerly of the CIC, about the fact that he thinks this is a sovereign wealth fund, the U.S. taking stakes in Intel and MP Materials and so forth. Do you agree?
Morning, Matt. Well, I think it's a bit more of a utility play than it is a sovereign wealth fund play. But I think the underlying message is true, which is we must build refinery capacity and capability inside of our own country.
So, and you are obviously you're a venture capitalist. We've talked to you a lot in connection with Mark Douglas and Mountain. But you worked a lot on AI and in the technology sector. That's kind of your wheelhouse. Do you think we need the U.S. to have either a sovereign wealth fund or its own venture capital fund or a utility play of some sort in order to support the national security of our infrastructure?
Absolutely, Matt. I think, you think about the alternative of what happens with the pressures associated with Taiwan, the global political pressures associated with Taiwan. The alternative is much worse than us having a national refining and fab capacity.
And I'm taking a look at a recent post that you made on LinkedIn about this potential Intel investment by the U.S. government. You said that this will depend on how President Trump is as an investor. You also make the point that the company, it does have the technology to become a TSMC substitute, or at least the backup to TSMC. You also write about the potential that the government might be able to motivate Nvidia and AMD to commit meaningful volume to Intel when it comes to fab and packaging. With all this in mind, Joe, do you follow the U.S. government into Intel? Is Intel a viable investment from where you're sitting?
Great question, Katie. Good morning. I think that, first of all, I think Intel is an interesting play for the government to support. As you look across the landscape from recent earnings, obviously Nvidia crushed earnings, and TSMC did, AMD, Broadcom. And Intel missed, and Intel announced layoffs coupled with their miss. So I think the business is too big to fail and needs the government support. And one of the things the government can do to support it is motivate them to move into more of a third-party refining business model, a la TSMC, coupled with bringing capacity and demand from AMD and Nvidia. So yes, I think that's the right play for the government to take. From a public market investor standpoint, Katie, it's not my forte, so I'll defer to the long onlys and the hedge funds out there. But I think from a government standpoint, it is the right play from a national security point of view.
Fair enough, fair enough. I am curious what you think about the potential timeline here. Again, going back to your post and what you're saying, it sounds like Intel rather, has all the correct ingredients here. Now it, of course, has some government backing as well. But this isn't like turning a light switch, Joe. How long do you think that it might take for some of these factors to really come together?
Okay, some interesting things are afoot. So TSMC, as part of their earnings, announced 15 new fabs distributed globally, and they intend to begin packaging in their Arizona facility at some point in the future. But today, all the packaging occurs in Taiwan. So that is a critical supply chain element that's at a geopolitical risk today. So if you're the government and you're Intel, this is a decade-long journey to convert the Intel business model to a third-party refining capability, as well as building the supply chain, the domestic supply chain around them. So this is not a 12 or 24-month transition. This is a decade-long project. But I think, again, from a national security standpoint, it is one well worth taking.
Dude, while we have you, I want to get to Nvidia. I think you said they crushed it. I don't know if the market shares that view. What's your take on what happened yesterday with the numbers and what the outlook signifies?
Matt, I think the street is missing the concern over the data center revenue. If you look at what is happening in their data center revenue business, it is not a demand problem. It is a supply problem. Their Blackwell chips are sold out well into next year. TSMC capacity is sold out into next year. So the challenge is not how do they generate demand and get orders. The challenge that they face is how do they make chips fast enough to fulfill these orders. So the fact that Nvidia was able to come in line with revenue forecast despite the bottlenecks in supply chain, I think is really compelling. You couple that with, for instance, the earnings report that came out of CoreWeave and seeing them continue to grow at 200% year over year with EBITDA margins north of 60%. I'm have the luxury of investing in a company called Lambda Labs, and their performance. I agree with Dan Ives. Like, we're in the very first innings here.
What do you think, Joe? And I ask you as someone who has the perspective of starting businesses, working in this sector. You know how long and how much investment it takes to get something off the ground. But if China doesn't want its companies buying any more Nvidia chips, can they just steal the IP and make something on the level of Blackwell, or is it far too technically challenging to get there?
It's far too technically challenging in the short run, Matt. And I think what's happening is the Huawei chip in some respects is comparable to the H20. You know, it has much more powerful compute, but is a much bigger form factor. So there's some trades there. But in a export-ready version of the Blackwell chip, it is leaps and bounds ahead of the domestic Chinese alternatives. And then if you think about what is in the future with the Rubin chipset, coupled with TSMC's migration to the 2 nm production capability, the gap is extending.
All right, Joe, good place to leave it. Great to get some time with you. That is Joe Kaiser of Mercato Partners. Meanwhile, let's get a check on these markets. Just over an hour into the trading session, you can see the S&P 500, it was positive. It's not anymore, down about 0.1%. The NASDAQ 100, tech is a really interesting trade today, much more interesting than what the NASDAQ 100 would suggest, higher by only about 0.1%, because you have Nvidia lower right now by about 1.6%, and yet you have green when it comes to the big tech benchmark, because you have the other names in that index doing pretty well right now, shaking off some of the concern that we have about Nvidia, whether or not we're going to see CapEx slow down there. Broadcom and some of the other names higher this morning. Then the bond market, nothing to talk about there. The 10-year Treasury yield is unchanged at just about 4.22.
Whenever you say shaking off, I wonder if that's a plant. Is it a purposeful reference
to Miss Taylor
to T Swift?
Mrs.
Kelsey.
No, I feel like I think she's going to keep.
That's not going to happen?
Yeah, maybe he'll
Travis
change
Swift.
his name.
Yeah,
Travis Swift. That has a ring to it.
Could be.
Yeah.
All right, let's get a look at some of the single stocks moving this hour. We had Dick's Sporting Goods raising its outlook as it prepares to acquire Foot Locker. We were talking about that with our BI analyst, a $2.4 billion acquisition, but the shares are down 6%.
Meanwhile, Victoria's Secret higher right now, showing signs that turnaround efforts are paying off as sales rebound. Shares currently up about 3.5%.
Is it the place to go? Is that where?
I don't know.
Are the people
Apparently
going to
some people are
Victoria's
going there.
Secret? Best Buy beat earnings and reiterated guidance as demand offsets the impact of tariffs, but the shares are down 5%. So, yeah, I mean, unless there was a healthy run-up into this earnings report, which I'm guessing there wasn't, that would be buy the rumor, sell the news. But in fact, Best Buy, if you look at the shares, I mean, actually, they're only down 16% this year, including the 5% drop.
Right. I don't know, pretty middling overall. But really goes to show that when it comes to the retail names, and we just looked at 3 of them, a lot of nuances there. But coming up, we're going to talk about volatility. It's vanished in the stock market this summer, and hedge funds are betting that the calm will last. We'll discuss with CBOE's Mandy Zhu up next. This is Open Interest. Hedge funds are shorting the CBOE Volatility Index, the VIX, at rates not seen in years. Net short positions against the VIX are at the highest level since 2022, evidence of either confidence or complacency in markets. Let's discuss with CBOE Global Markets Head of Derivatives Market Intelligence, Mandy Zhu. Mandy, great to see you in person.
Great to be here.
So shorting the VIX with the VIX at 14, is that the move? Do you think that we could actually head lower here?
So I think the hedge fund positioning data is a little, not misleading, but it's really just reflection of the fact that we're seeing tremendous demand and growth in long volatility ETPs that are really coming from retail. So those AUM have grown to 2-3 year highs, and hedge funds are really taking the other side of it. Now, that said, that's not their only position, right? They could have offsetting long positions in either S&P options or in other instruments. But certainly, I would say, we were seeing from a retail perspective demand to go long volatility, particularly through these ETPs. And on the hedge fund side, I do think that the steep VIX term structure, the roll down being particularly attractive for those who are short the VIX futures. I think that plays a role in kind of the positioning that you're seeing in the futures market.
So Katie anchors ETF IQ.
Sure do.
With Eric Balchuna, superstar, and my best friend Scarlett Fu.
Yeah, it used to be you, but
I was on it. But ETP, I imagine, is exchange traded product.
Correct.
Is that right?
Yeah.
Okay, I just want to get that acronym clear. In terms of the VIX, we're looking at a 14 handle right now. How much lower can it possibly go? I mean, what's the
single digits?
Yeah.
What's the upside of shorting the VIX?
So a couple of things stand out to me, kind of with VIX being where it is. First is that low vol is not just an equity-specific phenomenon. We're seeing it across asset classes. And actually, for the first time since 2021, we're seeing short-term implied volatility levels across all asset classes trade below their long-term average. So very much this tells me it's macroeconomic driven. It's a fact that right now, economic data, as we saw today with GDP, with personal consumption, it's still holding up. And then at the same time, the Fed is about to cut, inflation's in check. So current macro conditions are positive, which is why short-term volatility is so low and is so low across asset classes. But if you look longer term, longer out in the curve, we are seeing more premium being priced in for longer dated options. I think that reflecting the fact that the outlook still is more uncertain kind of in the next year.
Okay, so to dumb it down, short term, it seems like everyone is feeling kind of fine. You stretch out that timeline, things start to get maybe a little bit more nerve-wracking. Is that true across asset classes, or do you see any divergences there?
It's pretty consistent across asset classes. So in equities, you can look at the VIX index, which is 1 month expected volatility for the S&P, versus VIX 1 year index, which is our equivalent measure for 1 year implied volatility. We have similar measures for credit, for rates, that kind of give you a sense of term structure, and we're seeing that steep term structure really consistent across asset classes right now.
How does it look here in the U.S. compared to overseas? I mean, a lot of investors aren't going to even look overseas, but I imagine if you're this deep into it, then you're looking globally.
And globally, it's very much the same story. Like 1 month implied volatility, whether you're looking at Euro stocks, whether you're looking at the MSCI indices, very much toward the lows of the year. The other thing I would say, comparing now versus say even a month ago when VIX was at 15, the difference is that back then VIX at 15 was still embedding quite a bit of risk aversion, whereas this time around actually not so much in the near term. So a month ago, VIX at 15, S&P realized vol 5, right? So it was like 10-point difference, and that premium was at a 1 year high. Now, VIX at 15, realized volatility at 12, where actually that premium is below average. So people are very confident or very optimistic of the near term, like immediate outlook, whereas it's really the longer term that we're seeing kind of a little bit more premium.
Even in the near term, it just boggles the mind, right? Yeah. We are just about to see, it feels like, tariffs hit. Inflation has turned around and is going the wrong way. No one knows exactly what the Fed's going to do in September, and maybe Lisa Cook is actually fired and not going to vote. Like, there's so much craziness that the market is reacting not at all to.
Well, that's the thing, right? We had Nvidia earnings. Sure, we got past that hurdle. We have PCE tomorrow. We have a jobs report next Friday. Then we have a very politicized Fed meeting coming up on the 17th. It is a little bit unintuitive that short-term volatility isn't reflecting any of that.
So I do think, a lot of the factors you talked about, like tariffs and inflation, the way that people have been positioning and playing for that is not at the macro index level, right? It's at the single stock, it's at the sector level. So how are tariffs impacting different industries? How is AI disrupting different industries? Even within tech, you're seeing rotation, hardware versus software. So a lot of movement below the index surface, but because correlation is so low, in fact, correlation is at historic lows right now, both realized correlation as well as forward-looking expected correlation at all-time low. So high dispersion, low correlation, helping to suppress index level volatility. And the way that people are really assessing these macro factors is through stock selection, sector rotation.
Well, just before we let you go, bring us into that dispersion. What looks extreme on either ends of the spectrum?
Just the levels of dispersion that we're seeing right now in the market.
Within the different sectors, like, is there any one sector that sticks out relative to another sector? As one looks very volatile right now and is braced for volatility versus maybe smooth sailing?
I think at the sector level, it's the same story. Like, a lot of the sectors are seeing quite a bit of high correlation. If you look at our correlation index, Core 1M, which is the expected 1-month implied correlation for the S&P 500, that's at historical lower today than it was in 2017 when the VIX was at 9.
All right, Mandy, great to have you in here with us. Thanks so much for joining us. CBOE's Mandy Sue. Coming up, Fed Governor Lisa Cook files a lawsuit challenging President Trump's attempt to fire her. That kicks off really an unprecedented fight, an historic fight.
Ooh, I knew you were going to bring that up.
I don't like it when you say a historic.
I know you don't.
Because it's like a vowel at the beginning. So an historic.
We're going to continue to follow
It's
this.
uncharted territory.
Uncharted. Okay, this is Bloomberg.
The White House is responding to Fed Governor Lisa Cook's lawsuit against President Trump, saying the president exercised his lawful authority in his attempt to fire her for alleged mortgage fraud. Joining us now with more context is Elliot Stein, senior analyst of litigation here at Bloomberg Intelligence. So this is, I think it's so funny because this is one of the most interesting stories out there.
Absolutely.
But it's not moving markets at all, not one iota. But putting that aside, it is unprecedented, right? We don't know what cause really means in this case.
That's exactly right. We've never seen a president fire a Federal Reserve Board governor. The statute says that he can fire Federal Reserve Board governors for cause, but it doesn't say what cause means, and we don't have any court rulings in this context with the Federal Reserve, helping us out. We do have other statutes that say cause usually means some sort of inefficiency or neglect of duty or some sort of malfeasance. But we don't know if those are the terms that are going to apply to Lisa Cook, and we don't know if mere allegations related to her mortgage applications even rise to that level.
So give us the timeline here, because we have a Federal Reserve meeting coming up in September. That decision expected on September 17th. She is a voting member as a Fed governor. Will she be able to actually do her job here?
We potentially may get a ruling pretty quickly because she filed a TRO, a temporary restraining order, that seeks to block President Trump's letter from having any effect. What's interesting is she also named as defendants the Federal Reserve Board and Jerome Powell because she wants them not to effectuate the letter. So she got a good judge. We'll probably get a hearing on her TRO application within days. We may get a ruling from that judge. And that could still be in place by the time the September meeting rolls around. But in my mind, the critical date is actually February, not September. In September, she's only one vote out of 12. I doubt it's going to have that much sway. In February, the Federal Reserve Board will be able to reappoint or block the reappointment of the regional reserve bank presidents who also rotate onto the FOMC. And so if President Trump has a more favorable balance without Cook on the Federal Reserve Board, he can influence the regional bank presidents as well.
So, and I also wonder about how quickly the Supreme Court will hear this. Assuming she gets an injunction, right?
Yep.
And this goes all the way to the top. How quick have they been? It can be an emergency case.
Yep.
What have we seen thus far in this court?
Yeah, I think we could actually get a Supreme Court ruling on sort of these preliminary emergency issues within a few months, by year end.
But not by September 17th.
I doubt by September 17th. But again, I'm not even sure that really is all that important. I think more important is that they have clarity on whether she continues to serve before February. But we did see in other cases where President Trump has fired commissioners of federal agencies like the NLRB and the Merit Systems Protection Board, he fired them in February. In May, the Supreme Court ruled on whether those commissioners would continue to serve or not.
And we don't have much time left, but I want to go back to the regional banks because Bloomberg News did report this week that the Trump administration is reviewing options there on how they could exert more influence. I mean, what are some of the potentials here?
Yeah, I mean, it's going to be fascinating. This is like looking ahead many steps, but it seems like, to me, that's probably what President Trump is trying to do here, because just controlling the Federal Reserve Board isn't as important to him in terms of monetary policy as controlling the FOMC. And because you have regional bank presidents who serve on the FOMC, in my mind, that's what he's trying to control.
Right. He needs Cook and Waller, though, to go along with it.
Cook and Bowman, yeah, exactly.
Sorry, Cook and Bowman, yeah.
I mean,
Waller and Bowman.
We got there. We got there.
Elliot, it is not Friday yet, but it feels like we're almost there.
Certainly feels like something, doesn't it?
Elliot Stein there of Bloomberg Intelligence talking about really a fascinating case. But once again, we haven't seen the 10-year move. We're looking right now at 422 on the 10-year. So doesn't look like the bond vigilantes care at all yet. And that could be the key word.
Absolutely.
Have you seen that John Cusack movie?
No.
Okay. Let's get a check on what's going on in the markets right now. Nvidia stock is down, and that's holding the S&P back from bigger gains. You can see Nvidia off now 0.1%. Tomorrow we're going to hear from Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods.